guys. Good morning, good morning, good morning. It's a very, very big day in the markets today. It's FOMC. Nice to see everybody in the room here today. So without much ado, let's get started and kind of discuss everything that's on the calendar. It's really the next 24 hours are going to be super critical. Let's take a look at the calendar here. And you can sort of see how everything is starting to kind of trickle down tonight, today, tonight, tomorrow night, tomorrow morning. So in front of us, we obviously have the FOMC statement, which is going to be the biggest event of the day. The really, really big question is, are they going to go? Market inflation was very, very hot last week. So there's a lot of negative inflationary expectations. The market may be, it's very hard to gauge just how hawkish the Fed is. There is clearly massive slowdown happening in the economy, most specifically in the housing sector and in the durable goods sector. I mean, the autos are starting to roll over. The housing demand is certainly starting to roll over because of the cost of interest rates. It's basically the cost of financing has doubled in a matter of 3 months, from 3% to 6% of the mortgage payment. That's really ballooned people's monthly payment. I saw something like from 21 to 22, an average monthly household payment, if you would sort of take the rates and the average price, is triple. So it's impossible for anybody to finance that type of structure with any kind of ability at this point. And so that creates, I think, a lot of overhead on the Fed in terms of worrying that they could go too far too fast. On the other hand, they really want to cap their rate structure to 4% maximum. And the reason why they want to cap it to 4% is because the US fiscal condition is very fragile. We have a huge amount of fiscal debt that needs to be financed. The higher the interest rate that you finance, it really doesn't matter how much of debt we have. It's the debt servicing that really costs the government, because at 2% debt servicing, you have a couple of $100 billion worth of debt service. At 4%, you might go to almost $1 trillion in debt service. That's very expensive. And so they want to maintain the uppermost level of debt service at 4% or less. So there's this tug of war between most policymakers on the Fed of like, let's just go to 4% quickly and stay there, versus no, let's do it slowly, because otherwise we could tilt the economy into a recession, and that could be worse on so many grounds. Because if you sort of have high inflation and a recession, you have lower tax receipts, and you still have very high debt service costs. So I think the cooler heads may prevail, and they should go to 75 basis points. We'll have to see. that would be a relief in some ways. The other big event, by the way, that's happened overnight that in some ways is overshadowing all of this is that Vladimir Putin has called for mobilization of the reserves, not conscription yet, but mobilization of reserves. 300,000 reserves to be called onto the conflict in Ukraine. And obviously, I think that's going to create more societal tensions in Russia, because now you're going to see fathers and brothers and just sort of like not professional military men being called up to the front. Most of them are really untrained. Russians don't really have a lot of advanced weaponry, whereas Ukrainians are now getting all this advanced weaponry from NATO and the US. So it could be just a bloodbath. And it seems that it's very difficult to say whether this is going to be worse or better for the macro economy if he is successful, in a sense that he brings all these forces and he drags the conflict out for longer and longer. Then he has the opportunity to squeeze the West on the oil front, right? On the other hand, if unfortunately all these people become just nothing but cannon fodder, there'll be such enormous pressure amongst the upper Russian elite to depose him and kind of bring the conflict to an end, that will be actually very positive for the global macro picture, because the moment the conflict comes to an end, oil prices are going to decline even further because there'll be this unbelievable anticipation that Russia is going to start dumping whatever oil production it has in order to essentially pay for all of the war costs it has had. So still difficult to say. Overall, though, I think when you look at the broader commodity picture, when you look at the let's take a look at the basic costs of everything. If you look at lumber was let's look at big picture here on daily. You see, lumber is literally at multi-month lows, right? Coffee is pretty much flat, but not it's at lower end of its range. Copper is clearly at quite a lot of multi-month lows. Cotton, I wonder if we have cotton. Let me see. Cotton was another one that was. Let me just see if I can add this. Cotton. Anybody trade cotton? No, I guess cotton is not traded, but take my word for it that cotton is also really low. So you have this whole bunch of commodities that are going low, and of course, oil is essentially trading, 80 to 85, 80 to 90, well off its 130 range. The interesting thing I think though is that if oil breaks below 80, right, that's a major deflationary signal. And if oil breaks below 80, I think you're going to see a much more easing conditions on inflationary front, and that should actually be helpful. But in the near term, today, as we're looking at the picture, the big picture, as I said, if the Fed goes 75, and let's take a look at like the hourly pictures here. If the Fed goes 75, oops, sorry, let me get rid of all this. Okay. This is the US 30. It's clear that this 30,000 has been a big area of support that we're all looking for. So if the US goes 75, there could be a relief rally to 3,100 quite easily. With NASDAQ, that relief rally really takes us to 12,000 quite easily, in my opinion, on the front. On the other hand, 100 basis point cut really does, not only will it test the near-term lows, which is the 1170, the really interesting question is going to be if it's going to break them. If we're going to just slice through all of this, I think if we take the lows out, it's very, very real possibility we go to 30,000. And with NASDAQ, if we take the lows out, there's a very real possibility we go to 1150, 11,500. So for equities, that's those are the key levels for the day today. For Euro, as we're looking around, Euro is consolidating, but really again also probing this 98 level. Again, to me, if the Fed goes to 100 basis points, it's quite possible the Euro goes 98. It may even go to 97.50. So these are the really, really big levels now, because this is sort of the near-term lows, and a big push to 100 would flush us all the way down hard. Conversely, dollar yen will then try to re-challenge the 145s, in my opinion. On the other hand, a 75 probably is going to drift us to 143, and probably going to take us to parity on Euro as far as it goes. Cable is its own story, because cable is really more abundant in its own conditions, and it's going to have the headwinds of the BOE tomorrow. I'm not sure how much play there is in cable. I continue to believe that I think if you get the trade of 75 basis points, probably the most intelligent trade that would take the dollar risk out of it, and would just let you try to trade the dollar strength without being exposed to dollar strength, would be Euro pound. I think that would, Euro pound still looks quite good on the charts here. We've had obviously a corrective mode off the 87.80 level, but it's very feasible. It's 87.50. It's very feasible that we could see 88 on a 75 basis point hike instead of a 100 basis point hike. So I would be looking for that, especially in the wake of tomorrow's BOE, which is going to be facing very stiff challenges to not really raise as hard as the market expects it to. So that to me is probably going to be the most interesting trade, going forward. Now, the other big events, as I said, aside from the Fed, will be the Smb rate decision. And the Smb rate decision is a big shock. They're looking to go positive for the first time in I don't even know 100 years. It's been a very, very long time. So for the Smb to go positive could really have, I think, a significant impact, because it now becomes a positive carry trade, or at least not a negative carry trade, because the rolls are so expensive. So that creates some interesting strength on the Swissy side. And as I said, the other way to trade euro pound is pound Swiss, right? That's a sort of a similar situation. And pound Swiss looks weak. You know, the 110. I would say the 110 is the big resist here. So I think it's really feasible here that pound Swiss can go 109, 108.50 on a Smb hike, and maybe a relatively hawkish tone out of the Smb. So you have this, you know, the combination of the Smb and BOE tomorrow. This obviously assumes a couple of things: that the Smb does hike, and they don't post a very dovish statement saying, well, we're going to hike, but that's all we're going to do. If they do that, the trade really becomes much less interesting. And the BOE certainly is expected to hike, right, by 50 basis points, which is tepid relative to everybody else. And I think if they communicate the fact that their hands are constrained by the truly negative conditions in the UK economy, that really creates a great big spread on the pound Swiss that can take us all the way down to 108.50. You know, there are two ways to trade this. You could anticipate this and take the risk and say, okay, I'm going to be willing to take a punt here with, you know, 110 stop. If I'm right, this is going to go to 108.50, because certainly if, you know, if this Smb hikes and the BOE hikes with a small amount, you're going to get this big knee-jerk reaction. It's going to be hard to jump on that post-event. Or you could trade it post-event sort of on a longer-term basis, as that this is a, you know, continuous downward trend, and this downward trend may, especially if the Smb communicates that this is not the only rate hike they're going to do, that this downward trend is worthwhile, you know, continuing for maybe 108, 108.50 target. So I'll leave it to you, but I think there's just really quite a lot of interesting trades everywhere in the market on FX, on equities, obviously depending on how the event plays out as we go forward. The other thing that's interesting is if you look at gold. So gold looks horrible, but still remains really in that 1650 support level. Let's go back to maybe the 4-hour chart. You kind of just sort of, you know, you look at it. It's not like gold is a great looking chart, but if you look at the very, very near term, what you can basically say is that, okay, this is a 1650 support level. It's been here since, what day is this? You know, for about a week and a half. We've just kind of held the lows, held the lows, held the lows. The market really hasn't budged. So to me, now 100 basis point hike, that's going to kill it. 100 basis point hike probably takes us to 1600 on gold. But a 75 basis point hike, that's an interesting trade that could result in gold going to 1700. In other words, you know, sort of we bought the bottom here. The Fed is not going to be as aggressive as it thinks. It's still going to be positive yield. It's still going to put gold at a disadvantage, but it's just a relief rally. So to me, I'd be watching this. I think, you know, if gold continues to act positive against a 75 basis point hike, I would certainly take a punt here against these lows for a gold long. And then last but not least, taking a look at crypto, which has been very quiet. Crypto is super, super quiet. It's a 4-hour chart. You can see, look at the volatility compression on crypto. It's just really, really tight. Although there is nothing going on here. It's really drifting lower. One of the things we talked about last week that I think was interesting was we talked about the idea that Ethereum fork was going to be possibly a big event. It turned out to be a big event the other way. This is actually a key sign of a bear market, where everybody expects something good to happen. You have that event happening, and the result is negative price. That is uber bearish in many ways, because it just means there is not only any appetite for the asset, but there's appetite to sell the asset on any excuse. And so far, honestly, it looks horrible. You know, you have continuous selling pressure here, a whole bunch of selling blocks in the Ethereum. Maybe we get a little bit of a reversal here, short covering move, but overall, you know, the momentum trade stays in place, and you know, it looks much more to be a continuity trade to the downside right now than any kind of a reversal trade. So a move in Ethereum towards the 1200 really is going to just destroy the last remaining bulls in the trade. Overall, crypto remains essentially a dead asset, in my opinion, with a clear bearish tilt to any type of price action. So unless unless we sort of reverse all of these flows, the basic idea here is you sell the rips. Any kind of a rally in crypto is just an opportunity to establish fresh shorts until the price action changes course. The only positive thing you can say about crypto is that further downward momentum has more or less ceased. You know, we sort of, we broke the 20, we broke 19, but at the 1800s, we're kind of holding up the lows. You can see that on the 4-hour charts, they're kind of holding the 1800 lows. If you had, if we had a positive green block momentum breakout, you would then, you could make an argument, okay, this is a near-term buy, and I'll get long against this most recent Bitcoin low for a possible reversal back up high. Similarly, if you were to look at gold, by the way, on this type of gold just looks horrible on a 4-hour basis. The only thing I would say is, if you wanted to be really cautious about this gold reversal, if you didn't want to take the pattern, but if you wanted to be cautious about the gold reversal, I would wait for a fresh RSI high green block as at least a sign that buyers are interested. And if you had that sign, then yeah, maybe you could buy the rest. So sort of to give you, here's an analog of how I would trade this. So you have a similar kind of situation in gold in July, where it gets sold out, sold out, sold out. We have a whole bunch of pink and red labels. And you could say, well, okay, this seems to be a bottoming formation that I'm not making any lower highs. But if you waited until you had an inkling the buyers were buying here at 1751, right? 1751 would be your entry against 1682. So that's like about a 70-point stop. You certainly had a chance here, 1751, of at least 50, 60 points to the upside before it started to kind of roll over. So you had at least half your risk. If you're risking 80, you're risking 70, and you had your first target at 35, you certainly could have made the first target over the next couple of days. And that's probably the right way of trading it. Wait till the price action gives you some confirmation that buyers are interested. Now the buyers were interested, but they ran out of gas here, and they really couldn't do much more. And then once they started printing, red labels, certainly the trade was over. But waiting for that confirmation really, really does help you. And this is something that you could easily get if you join BK, and you can join BK just by simply adding money to your account. The great thing about BK is you don't have to pay us. We have this great relationship with Eightcap, where if you simply top off your account, you can have free access to all of our services, including all of my signal services, all of my trading services, but most importantly, the indicators, which are proprietary, and they give you a very, very good reading of exactly how you could trade the market in a very intelligent fashion. So that's pretty much it, guys. We've got a very, very big day ahead of us. Clearly, the price action right now is going to be sideways until the Fed comes out. But as I said, the really big question is 75 or 100. How hard will the Fed go at the FOMC? So to review, the interesting trades here are, if we go hard, then the US 30 can break the 30,500, go to 30,000. NASDAQ could possibly break 11.7 and go to 11.5. If we go to 100, then I would certainly not, dollar yen probably would be the one to trade to 145, and maybe euro dollar to 97.50. But if you wanted to stay out of the dollar denominated trades, the cross trades that are most interesting to me, especially if the Smb comes out relatively hawkish and the BOEs remains relatively dovish as we're expected to be, is the pound Swiss to the downside with a possible target of like 108, maybe 107.50 as the week proceeds. So that's the week. That's how it shapes up. Those are the most interesting trades in front of us. I wish you guys the best of luck, the best of trading today. And as always, please visit us and come join us at BK. As I said, all you have to do is simply add money to your Eightcap account, and you will have access to all of our tools, execution tools, and trade ideas all day long. Thank you so much. I'll see everybody later.